Nvidia is still a buy, shocking price prediction, 10 reasons to buy NVDA stock analysis. NVDA stock. Nvidia has been one of the most talked about stocks in the market. Despite a recent dip following their earnings announcement last week, the question remains, is Nvidia poised for a comeback, and could the stock reach new all-time highs this month? Earlier this month, Nvidia CEO Jensen Huang was asked by a fan to autograph her chest, a moment that might signal the growing hype around the chipmaker is reaching unsustainable levels. Nvidia's computer chips, which are particularly well suited for AI applications, have driven the company to unprecedented profitability in recent years. Nvidia briefly became the world's most valuable company before a sell-off, and now ranks as the world's third most valuable company, with a market capitalization of $3.1 trillion, trailing only Microsoft and Apple. With AI emerging as the hottest industry of 2024, showing no signs of slowing down, Nvidia continues to thrive. For those closely following the stock, it's clear how rapidly the company is expanding, and its CEO firmly believes they have a groundbreaking product that could become the most successful in history. If you had invested $1,000 in Nvidia stock 20 years ago, it would now be worth nearly $1.3 million. In contrast, the same $1,000 invested in the S&P 500 would be worth about $7,500 today. If you had bought $1,000 worth of Nvidia stock in 2005, your investment would have grown to $731,449. However, there's more to Nvidia than meets the eye. So, could it still be a millionaire maker stock? In this video, I'll break down 10 reasons why Nvidia might still be a strong buy. There's a lot to cover, so I'll keep this intro brief. If you find this content valuable, please hit the like button. It costs nothing but helps our channel tremendously. Remember, I'm not a financial advisor, and this is not financial advice. Always do your own research and due diligence before making any investment decisions. With that said, let's dive in. Stay tuned as we explore whether Nvidia is still a strong stock to consider buying now. Despite delivering strong Q2 earnings and stellar guidance, Nvidia's stock dipped last week. However, its growth could accelerate in future quarters due to several positive tailwinds, and many analysts believe it presents a buying opportunity. So, here are 10 reasons why Nvidia stock could be a strong buy. And, to make it more interesting, I will present them to you backward, so, let's dive in. Reason number 10. As one of the world's leading microchip manufacturers, Nvidia is renowned for its impact on graphics and gaming. Its chips power some of the fastest, highest resolution graphics and serve diverse applications, including gaming, data centers, AI, and autonomous vehicles. Second quarter gaming revenue, reported on August 24, was $2.9 billion, up 9% from the previous quarter and up 16% from a year ago, and surpassed 2,000 games on GeForce Now, expanded the service into Japan and announced launches of Black Myth, Wukong, and Star Wars Outlaws. Reason number 9, the $1 trillion data center migration. A massive shift is underway as data centers transition from CPUs to GPUs, with $1 trillion worth of data centers expected to adopt accelerated computing in the coming years. Previously, data centers relied solely on CPUs, but GPUs are now becoming standard in future data centers. Jensen Huang highlighted that Nvidia's data center business is expected to see significant growth next year, which is noteworthy given that Intel and AMD currently dominate the CPU market with over 90% combined market share. Nvidia's hardware enables data centers to optimize utilization by supporting generative AI and 5G applications. As computing demand rises, maximizing efficiency and utilization will remain a top priority in data centers. Intel, facing challenges due to mismanagement and rising costs, still controls over 70% of the market, while AMD holds just over 20%. What many may not know is that Nvidia's CEO, Jensen Huang, and AMD's CEO, Lisa Su, are cousins. These insights point to a bright future for Nvidia, bolstered by its innovations in AI and data center technology. Stay tuned as we explore more reasons why Nvidia could remain a top investment choice moving forward. Reason number 8. Currently, Nvidia seems poised to continue creating value, backed by its dominance in a leading industry, an impressive customer base, substantial cash reserves, keen strategic insight, and a proven track record of innovation. These strengths position the company well for long-term growth. While demand for AI chips might cool slightly, the AI revolution ensures that overall demand will remain high. Key considerations include competition, regulatory sanctions, and unexpected hurdles Nvidia might face. Despite these risks, Nvidia remains ahead of many competitors and continues to launch groundbreaking projects, such as the Blackwell, which is coming soon. The Blackwell GPU architecture features several innovations designed to reduce the energy consumption involved in developing, training, and deploying large language models. According to Nvidia, the platform can cut costs and energy usage by up to 25 times. Analysts have described the Blackwell system as one of the most ambitious projects in Silicon Valley, poised for widespread adoption by major cloud service providers, server makers, and leading AI companies, including Amazon, Google, Meta, Microsoft, and Tesla. Despite a delayed launch due to a design flaw, Meta Platforms, Alphabet, and Microsoft are reportedly set to place Blackwell orders worth tens of billions of dollars. Don't forget to like, subscribe, and comment if you want to see more analysis videos. Now, back to Nvidia. Reason number 7, government demand. Forbes senior contributor Peter Cohan suggests that governments will ramp up investments in high-performance GPUs to build their own large language models, tailored to their specific languages and data, and Nvidia will surely benefit from that since it's on the top of GPU performance. Reason number 6, there's another compelling reason to consider buying Nvidia stock. The next generation of generative AI is here. The global AI market is expected to grow from $500 billion to $2.7 trillion by 2032. Meanwhile, the robotics market, valued at $46 billion in 2023, is projected to grow 15.1%, reaching around $169 billion by 2032. Although the robotics market is currently smaller than AI, it has the potential to multiply significantly if it follows a similar growth trajectory, with Nvidia poised to be the leading technology provider once again. Moreover, the demand for powerful GPUs is rising as the next generation of generative AI approaches. Nvidia CEO Jensen Huang stated, "The world of human-engineered software is moving to generative AI software," noting that Nvidia is already extensively using generative AI in its coding. However, he emphasized that current applications like coding, chatbots, and image generation are just the tip of the iceberg. Huang highlighted other areas being transformed by generative AI, including ad targeting, large-scale recommender systems, robotics, and search systems. The shift from human-engineered software to generative AI is in full swing, and Nvidia is at the forefront, extensively using AI coding to revolutionize ad targeting, large-scale recommender systems, robotics, and search functionalities. Training the next generation of AI models will require 10 to 20 times more computing power, presenting a massive growth opportunity for Nvidia, which the company is well positioned to capture. Nvidia is actively working on humanized robots that could revolutionize manufacturing, warehousing, and customer service, positioning the company strategically to capitalize on the growing demand for robotics, similar to how it led the AI boom. Leading companies in robotics, such as BYD Electronics, Siemens, and Teradyne Robotics, are adopting Nvidia's Isaac robotics platform for research, development, and production. Major Taiwanese electronics manufacturers are using Nvidia's reference workflow combining Metropolis Vision AI, Omniverse simulation, and Isaac AI robot development to create more autonomous factories. Nvidia announced Omniverse Cloud Sensor RTX microservices to enable physically accurate sensor simulation, expediting the development of autonomous machines. Reason number 5, another reason to buy NVDA stock is that Nvidia won the Autonomous Grand Challenge at the Computer Vision and Pattern Recognition Conference for its advances in building physical, generative AI applications for autonomous vehicle development, showing that it is leading the way in this sector, which will be the next chapter of the AI revolution. Reason number 4, another compelling reason to consider buying Nvidia stock is that we can see impressive revenue growth and surging demand for Nvidia products, reflecting a remarkable increase over the past year across all segments, including data centers, gaming, professional visualization, and automotive, and it has been showing impressive numbers, like the ones from the last report of August 24th, as follows: record quarterly revenue of $30 billion, up 15% from Q1 and up 122% from a year ago. Record quarterly for data center revenue of $26.3 billion, up 16% from Q1 and up 154% from a year ago. second quarter gaming revenue was $2.9 billion, up 9% from the previous quarter and up 16% from a year ago. For data center, the second quarter revenue was a record $26.3 billion, up 16% from the previous quarter and up 154% from a year ago. For professional visualization, the second quarter revenue was $454 million, up 6% from the previous quarter and up 20% from a year ago. For automotive and robotics, the second quarter automotive revenue was $346 million, up 5% from the previous quarter and up 37% from a year ago. Given these numbers, it's not unreasonable to expect Nvidia's market cap to double to $6 trillion in the next 5 years, a conservative estimate compared to others. Beth Kindig of the IO Fund, for instance, anticipates Nvidia reaching a $10 trillion market cap by 2030. Reason number 3, Nvidia's massive stock buyback plan. There's another compelling reason to consider buying Nvidia stock after its recent pullback: the company's aggressive share repurchase plans. Nvidia's board of directors has approved a $50 billion stock buyback, adding to the $7.5 billion remaining from its previous authorization. Companies generally authorize share buybacks for 2 reasons: to increase earnings per share, EPS, by reducing the number of outstanding shares and to signal confidence in the stock's value. By repurchasing shares, companies can boost EPS, making the stock more attractive to investors focused on fundamentals. Buybacks also serve as a signal to the market that the stock may be undervalued. This move indicates the company's belief that its stock is undervalued at current prices. Typically, companies repurchase shares when they see the stock as undervalued, not when it's at all-time highs, unless they still view the current price as attractive. Stock buybacks often drive up a company's stock price. For example, Apple's announcement of a $110 billion buyback in May led to a 7% rise in after-hours trading, even amid declining sales. However, despite Nvidia's strong financial performance and substantial buyback plan, its stock still dipped. Experts suggest that Nvidia's consistent outperformance has heightened investor expectations, making it harder to spark a positive market reaction. While the total buybacks represent less than 2% of Nvidia's market cap, this significant increase highlights the board's confidence in the company's future growth. Nvidia's willingness to invest another $50 billion in its own shares could bolster investor confidence as well. Reason number 2, analysts on Nvidia's price prediction. According to MarketBeat, the consensus price target for Nvidia is now $142, with a low forecast of $65 and a high of $200. Following last week's earnings report, all major analysts have adjusted their price targets, and notably, none have downgraded or lowered their targets. The only analyst who didn't raise their price target was Rosenblatt Securities, who already had a $200 target, which they have reiterated. Expectations for Nvidia remain high despite recent challenges. JP Morgan analyst Harlan Sur noted that the 2-month delay in Blackwell GPU shipments is unlikely to impact Nvidia's overall revenue outlook, as strong performance from its factories compensates for the delay. We expect gross margins to improve throughout next year, with Nvidia maintaining a strong lead over competitors thanks to its aggressive product launch schedule, said Sur, who raised his price target for Nvidia by $40 to $155 per share. Cantor Fitzgerald analyst CJ Muse, who reaffirmed his $175 price target and overweight rating on Nvidia, dismissed concerns over the Blackwell delay as insignificant, especially considering it precedes what he described as one of the toughest product cycles in Nvidia's history. We see no change in the AI narrative supporting Nvidia and believe today's potential pullback is simply another buying opportunity, Muse added. Piper Sandler analyst Harsh Kumar shared a similar outlook, upholding his $140 price target and overweight rating following the recent earnings report. Likewise, Bernstein analyst Stacy Rasgon raised his Nvidia price target to $150 per share, highlighting the company's strong data center growth and the expected boost from Blackwell revenue in Q4 as evidence of Nvidia's ability to exceed high expectations. Now, let's get to the first reason to buy Nvidia stock, which is the stock price outlook for the next 5 years. So, where will Nvidia stock be in 5 years? Nvidia has been a standout performer since 2023, driven by strong demand for its enterprise AI solutions. Following the company's report of triple-digit sales and earnings growth in the first quarter of fiscal 2025, investors are keen to gauge how far NVDA stock could climb over the next 5 years. The AI chip market is projected to reach $311 billion by 2029, with a compound annual growth rate of 20.4% from 2024, according to Markets and Markets. If Nvidia's data center sales maintain their current annual run rate of around $90 billion, this growth rate would push AI-related sales to over $225 billion by 2029. This potential surge in sales could support another doubling of Nvidia's stock price by 2029, assuming profit margins remain stable. However, it won't be without challenges. The assumption that Nvidia won't lose market share in AI may be optimistic, but it's crucial not to overlook the rest of the company's risks. Some analysts predict that the AI boom could taper off, potentially dragging Nvidia's stock down. While demand for AI chips might cool slightly, the AI revolution ensures that overall demand will remain high. Key considerations include competition, regulatory sanctions, and unexpected hurdles Nvidia might face. Despite these risks, Nvidia remains ahead of many competitors and continues to launch groundbreaking projects, with a very good perspective on its stock price, tick NVDA. So, what are your thoughts? Are you bullish on Nvidia, or do you think the stock has reached its peak? There's always a lot of chatter about Nvidia on social media, but remember to conduct your own research. I'm not a financial advisor, and this is not financial advice, so make sure to do your due diligence. If you enjoyed this analysis, please like and subscribe. Well, AI and Nvidia to the moon, just because we love it. Thanks for watching, good luck and good profit. Edward Cash Trader, please read the disclaimer in the description below.